Hello everybody, welcome back. Here I am on my crap Lenovo workstation crappy laptop. So I'm going to make this short and sweet because I appreciate the production value is not my strong point on these videos, and obviously taking a massive downside on this video. So let's just get straight to it then, shall we? So today is the eve before the CPI report. So again, taking positions on whatever it is that you believe is going to be the next CPI print is probably the only real way to try and play these markets at the moment, whether it's S&P, stocks, Forex, whatever, and obviously crypto, which just moves through association with that. So at the moment, the main thing that we can only really think about doing is thinking about something like as simple as Bollinger Band strategy on short-term timeframes. And we're just going to look at really just Bitcoin, to be honest with you. I mean, we'll just have a very brief look at the euro, which effectively is still, I would say, still sideways and down, which is fine because that's what we expected. The S&P on the weekly clearly having its breakout and looking for a bullish retest. As you know, I'm pretty sure that we'll be okay provided we're above 4,000. So all of that's fine. Again, it's all just feeds into the same thing that we've been saying since Christmas, really. There's not really been any difference in the overall long-term TA since last year, the end of last year. Which is again the beauty of looking at the higher term timeframes. I know when I make these videos on a daily basis, everybody's hanging on for some kind of short-term move, but really, same strategies, same analysis has applied since mid to late December. So no wonder I don't get that many more subscribers. But if you're not a subscriber, you might as well subscribe now and like the video and stuff like that. Right, so this is as basic as it gets, really. At this very moment in time, the 4-hourly Bollinger Band has gone horizontal. So with that said, it's still 65% more likely to remain above that. We're above the 200 exponential as well, which is why I bought the dip around this area, which was basically the buy the dip of the golden cross. Something we've been waiting for a long period of time. We got it. Doesn't mean that it has to have a V-shaped recovery from here. Not saying that it will have a V-shaped recovery from here. In fact, I might say that on the clickbait title, to be honest with you, because that is I suppose that would be the strategy that you're hoping to employ at this level. Again, I bought this dip when it was this Thursday, Friday when it happened. And the chances of a V-shaped recovery are not unlikely. That's what we always see when you see a golden cross get retested, whether it's a 4-hourly, 12-hourly, daily, or whatever. So yeah, I'm going to use that as clickbait. So shoot me. That is the TA that went into that idea of buying that dip. So yeah, it's not clickbait. It was my trading strategy. But either way, we've come down to retest that zone. We've managed to remain above there since we hit that zone. And being above there and this Bollinger Band Center offers chances of pumpage. Now, what I would say, if you look at the Bollinger Bands themselves, very, very tight. This means volatility is likely on it's in the post. It's probably a second-class post. We'll be waiting for it to arrive probably tomorrow when the CPI comes through. Now, I've looked at the Trueflation data, the Oracle-driven, independently number-crunched inflation data that comes through. We look at it all the time, and if you look at American stats, it's constantly coming down. If you look at Europe and UK, still going up. So we're completely wrecked city over here, but we don't really care about the UK or the European economy too much. We only care about it for the price of eggs when we go to the supermarket. It's not going to affect the price of Bitcoin. Only the American markets really count, and the American economy seems to have a handle on inflation, a dramatic handle on it, to be honest. So I would expect to see softer prints tomorrow, ever so slightly. Nothing spectacular, nothing massive, but ever so slightly. Remember, the last rate hike was a 0.25, so those sort of things aren't going to be fed through into this CPI print. The CPI data that's going to come through tomorrow is probably best part of 2 months old. So we just got to think about where things are. And if you look at the food and fuel, all of that's come down anyway. It's, in my opinion, about to go back up again, but that's all different. This is all like, we're looking forward for those higher prices on oil, natural gas, commodities, basically. Looking back, they have continuously gone down. So all of this should feed into the lower, or should I say, slightly softer CPI report that comes through. Either way, Currently, it's as simple as this. If Bitcoin closes 4 hourly candles below, we'll call it 21,800, and certainly 650, which would be these moving averages on the 4 hourly, expect continuation. Now, if we go to the higher term time frames, and again, be prepared, this is a very rubbish laptop, but if we go to the higher term timeframes, the trend is down. So the daily suggests further downside still. The 4 hourly is toying with the idea of actually, expanding to the upside, although it's not the most probable thing for the largest move at the moment. I think we're going to need that CPI report to come through to give markets, some kind of move in the right direction, whether it's up or down. But yeah, the daily doesn't look particularly happy, I have to say. And further downside is not unlikely when you look at this daily. There was one last thing I suppose I would say that could be implied in a hopium-style driven move, which is this RSI, as crooked as it might seem. There would be a great big breakout if we were to break out of the momentum on this. And the momentum is still obviously continuing down in the form of consolidation, which is fine. It's absolutely fine to consolidate. We've been calling for this for 2 or 3 weeks, to be honest. And we can continue to consolidate further. The lower the RSI goes in the form of consolidation, which falls with the price action, the better, because it would mean the more constructive, long-lasting move when it actually turns around and moves up. So I'm in favour of this continuing to consolidate anyway. That's fine, and I will continue to buy the dips because it fits the 4-year market cycle. Everything seems appropriate to continue to buy the Bitcoin dips, maybe not the altcoins because they don't have the greatest degree of certainty that Bitcoin has. There's also, I noticed a lot of FUD come out today, or the early hours of the morning, in regards to the BUSD SEC suing lawsuit case. I'm yet to read too much into it, but the headline itself is FUD. Again, yeah, it's just SEC. They're supposed to be out there to protect consumers or users of these markets, but it would appear that for the most part all they do is send them back down deeper into Rex City. Either way, from my understanding, and this goes back a couple of years, BUSD, whether it's a security or not, is the most backed of all the stable coins. So it just seems silly that they pick on them. Looks like it's just FUD, to be honest with you. And SEC, from what I can see, are just useless and completely inadequate and unable to win any of these lawsuits ever. So good luck to them. If anything, these sort of FUD things would be just another opportunity to buy the FUD dip. Anyway, this is supposed to be a short video. It's gone on for quite a long period of time here. Long story short, focus on those Bollinger Bands and the moving averages on the 4 hourly. The Bollinger Bands are pinching. We're moving into a CPI report as of tomorrow. This is going to cause volatility most likely. I think we'll just hang around in this kind of tight little range today. I'd be very surprised to see us break out in a massive way up or down today. Tomorrow is most likely going to be the one. CPI is coming through. You might even see something like a liquidation event, like a pump and a dump and then a pump, or a dump and then a pump and then a dump, whichever favours the CPI report itself. Either way, it's not a great place for derivatives, but spot trading, as I believe that this is approaching what would be a new, and probably already in, a new bull market for crypto, and that would be favoured by the way that the S&P looks like it's moving into a period of an accumulation over the long-term time frames. I'm talking about, getting positions now are going to benefit you, towards the end of next year. And I know that might sound disheartening for people who want to make loads and loads of money quickly, but if you're patient and you're looking to deploy capital into these markets and you're not silly and putting it into absolute piles of rubbish, then yeah, I don't see a problem with buying these dips and things like Bitcoins and maybe some of these top cap decent altcoins, with utility, good teams or whatever. Anyway, I talk about this enough, so there's no need to go into what's what and who's who. But so yeah, long story short, it's going to be a boring day, I'm pretty sure, and it's going to probably be a boring day for the most part tomorrow. And then the CPI comes out, we go mad, and then we can start to treat these charts appropriately. By then, I'll be back home, be able to use my real computer with all my real indicators, and we can have a closer look at that point. But until then, it is basically just the calm before the storm. Anyway, thank you for watching. I hope you have a nice day. Take it easy.